Hello everyone, today we have an exciting video about the Chinese e-commerce giant Alibaba, which I believe is a strong buy as a stock, and they recently reported full year result. So we will go through why I'm so bullish about the stock and the perspective and the risks behind it. So in this video, we will touch upon on the tailwinds for Alibaba, the business overview, the stock price and what it has been doing in the past. What are the risks if you are considering investing in the stock? And what it is the investment thesis from my perspective. Then we will compare Alibaba to Amazon. And finally, we will wrap up on what is my take on the investment. Alibaba is a Chinese e-commerce giant, and e-commerce is the biggest part of its business. E-commerce have a very strong tailwinds worldwide, and I believe that everyone would agree that it's an industry that is not going to go away, but actually it's going to grow more and more in the years to come. I have brought here two graphs that illustrate the predictions of how e-commerce is going to develop in the coming years with a special focus on China. In the left graph, we can see what are the predictions for retail e-commerce sales from 2014 to 2024. And as you can see, it's growing and growing every single year, with the growth of 50% between 2020 and the predictions for 2024. In the right graph, we can see that e-commerce retail sales in China and the predictions up until 2023. And it's an interesting take to see how Chinese e-commerce sales are believed to grow even faster than the worldwide counterparts. So China is really a hot spot for e-commerce. And not only the volume of e-commerce sales are believed to grow dramatically, but e-commerce is expected to take more and more share of the total sales. And that is what you can see in the light blue line in the right graph, where in 2018, 30.9% of the sales were e-commerce, whereas in 2023, it's predicted to become 63.9%, more than double as compared to 5 years earlier. So overall, very bullish predictions, which of course will benefit any business that is within the area of e-commerce, especially Chinese e-commerce. What you can see here is the world population spread among the different countries. And not surprisingly, China and India are of course the most populous ones. So Alibaba is in a really good spot. It is an industry that has very strong tailwinds and is positioned in the most populous country in the world. So this means with the highest addressable market. And many also of the countries that are neighboring China in the Southeast Asia, like Indonesia, Vietnam, Philippines, Thailand, as you can see here in the map, they are also quite populous. So the total addressable market for this company is really big. If we move to analyze Alibaba's business, Alibaba is an immense e-commerce ecosystem with more than 1 billion annual customers. And if you think about it, that is mind-blowing. How many companies out there have 1 billion customers as their customer base? Not many. The vast majority of Alibaba's customers are in China, of course, with almost 900 million annual customers, and the rest, 240 million, are instead international. Alibaba is an ecosystem with a lot of different businesses. So let's give it an overview and a look at it of what these businesses are about. So what you can see in this graph is that 43% of Alibaba revenues come from the Chinese retail marketplace. And among them, there is Tmall, which is a high-end retail businesses, and Taobao, which is China's leading mobile e-commerce platform for individuals and small businesses. 23% of the revenues came from China's commerce retail others category. 5% come from international retail commerce, and then many other sources of revenues from smaller business initiatives. It is worth mentioning that 8% of revenues come from cloud computing, 4% from digital media and entertainment, and 1% from other initiatives. So, as you can see in these slides, Alibaba owns a ton of businesses. It's very much focused in the e-commerce side, but it's also diversified in other bets like cloud computing, media and entertainment, and others. Alibaba just came out with the full year results, which show the staggering 41% growth of revenue year over year, which is pretty impressive for such an already huge company. The core e-commerce business grew 42%. Cloud computing was the fastest growing with a 50% year over year growth, and then media and entertainment grew at 7%, while others grew at 8%. If we look at earnings as EBITDA, they grew 24% year over year, which is fantastic, but I believe that earnings growth will blow everybody's mind once that in a few years the management team will shift the focus from revenue growth to the bottom line growth. If we look at how the business has been doing the past 5 years, it's mind blowing. In the left graph, we can see revenue growth, and we can see that it ranged all the way from 35% growth in the worst year to 58% growth in 2018. And each of these numbers are impressive. It is possible, though, that as Alibaba grows more and more in the years to come, at some point it will start plateauing the growth. So it could be that in some years Alibaba's growth could be less steep, but the numbers are there and the momentum for the business is there. Net income in the right graph is also been growing like a monster. And as you can see, in this last year, it didn't grow. But if you look into the numbers, that's not because the business did not generate earnings, but because Alibaba suffered from a one-time fine from the Chinese government. And we will talk about that later. But that is why it shows no growth. Actually, organically, the business did generate increasing income. So also the earnings are expected to grow and grow in the years to come. In the last conference call, the management team said that they will put a lot of profits in 2022 and also additional capital into strengthening their business. And I think this is a very bullish signal because this means that the management team is not complacent, but they are really focused on strengthening the moat of Alibaba. And Alibaba is already in a dominant position, but this will assure that such a strong position will remain in the years to come. And if we look at the stock price, we can see that it started trading on the New York Stock Exchange in 2014-2015 at $100 per share, and it is now around 200 per share, which means that it's doubled in price over the course of 6 years, and it is down about 30% from the highs of around $300. I think the stock price is severely undervalued. But before we get there and look at what is my investment thesis, let's move on to the risks behind the stock and why investors have been dumping Alibaba stock, making it fall 30% in the last few months. Alibaba got a huge fine from the Chinese government because Alibaba had a monopoly-like behavior. And this is a one-time fine, and in my opinion is actually bullish because it recognizes how dominant and how well positioned Alibaba is in the Chinese e-commerce space. Another bad news comes from the fact that Alibaba wanted to spin off its fintech division called Ant, and the Chinese government stopped that. And the reason why they stopped that is a political reason more than anything else. Jack Ma, which is the founder of Alibaba, said something that the Communist Party did not like. And for a kind of revenge against him, they halted his IPO. Another bad news comes from the US government, since there are now talks about deleting Chinese tech companies from the stock exchanges in the USA. I don't think this changes much since you can always buy the same stock from another exchange in another country. But one thing that I do focus on is what are these bad news about? And I don't see any of this bad news really being about the business of Alibaba. It is not that suddenly Alibaba shrink its commerce business or that it had to give up its cloud businesses. So none of this is really business related. And as an investor, we have to think about the business. We have to take care about the business. So what I see is that all these news make catchy headlines and will distract some people. But in my eyes, Alibaba dominant position is still very much intact. So let's outline some of the risks. And this is very important because you have to decide for yourself if you're willing to take these risks. So the risks are regulations, and that is what we just talked about. And then there is, of course, competition, as there are other e commerce platforms in China. Nevertheless, this is not a zero sum game. The market, the e commerce market, is growing and it is growing more and more in the years to come. So I don't see so much competition as a threat because I think that it's fine there are other players in the market and I think that they will all get their share. I just don't see any of these other competitors and any of these other companies eating Alibaba's market share. And then there is another risk that is China. China is pretty unpredictable and you never know what the government will have on the agenda tomorrow or next year. So with all that said, let's move on what is my investment thesis for the company. When I look at this price chart, what I see is a stock price that is today more or less on the same level of what it was in 2018. But if we compare this with the revenue growth from 2018, you can see that there is something mispriced. That's because in 2018 Alibaba was making 250 billion RMB as revenue. Today instead it makes 717 billions RMB in revenue, which means that it's making almost three times as much money it was making 3 years ago. But the stock price is more or less the same. This is an enormous discrepancy, and this is the way that I like to look at charts. I think that when the stock price will start following again the business growth of the company, the stock price will increase a lot, making Alibaba a really good buy today. So, my prediction for this investment is that we will see a plus 50, maybe even plus 100% in stock appreciation just for the stock to catch up with the fundamentals of the business. And on top of that, in the long term, if we predict a revenue growth of 30% year over year, which is totally feasible given the historical of the company, then I think that that is what we can expect as a stock price appreciation in the years to come. There are also other growth vectors. Alibaba has a lot of unprofitable bets businesses which today are not earning money and are actually pulling down the earnings of the company. But they might turn cash positive in the years to come and therefore they might contribute to the growth of the company. Furthermore, this company is very focused on China, which is a huge market. However, it might turn more and more global, increasing its total addressable market, especially in Southeast Asia, but all over the world as well. And this, of course, will be very positive for Alibaba and its business and for the investment. If we compare Alibaba with another fantastic e-commerce business like Amazon, what we can see is that Amazon revenue growth actually was lower on average than Alibaba's. So Alibaba is actually growing faster. And if we compare the valuation of the stock as a P/E ratio, which means the price of the business divided by the earnings of the business, what we can see is that Alibaba has a much lower P/E ratio as compared to Amazon, 23 against 61, which means that the price that we pay when we invest in Alibaba is much lower as compared to Amazon. And if we look at the forward P/E ratio, meaning the price of the business divided by the expected earnings for the next year, we can see that the forward P/E of Alibaba is much lower as compared to Amazon, meaning that Alibaba stock is discounted as compared to Amazon also in a forward perspective. So what I see in all this is a company, Alibaba, that grows tremendously fast, even more than Amazon, but it's priced at a much cheaper valuation. So in conclusion, Alibaba is a growing steadily at high digits, 40%. There are many positive tailwinds for the business, which will help it grow in the years to come. There are also risks, which are mainly from a regulatory perspective and not much from a business point of view. I think that Alibaba stock is undervalued today, and I expect a greater than 30% average yearly return on the investment in the long term. And this is as long as Alibaba business stays strong and continues printing strong growth numbers like it is doing today. As a disclaimer, I am invested in Alibaba stock, and please do your own due diligence if you are considering investing in Alibaba stock, as I am not a financial advisor. I hope you got a ton of value out of this video, and if you did, please click the like button. That really helps the YouTube algorithm to spread this video around. And click on the subscribe logo and the bell to be notified when I post new videos. That's it for today. Thank you for watching and have a great day.